So this is what it looks like after a withdrawal, and I pray that all of you guys will be able to do this in the next coming months, years or so, because your effort is supposed to be rewarded. Anyway, without wasting much of your time, let's jump right into today's video before any of this happened. So welcome back to the channel, traders. In today's video, I'm going to take you through one of the craziest journey I've ever had in the markets, turning a 97-cent account into over 19,000 using nothing but pure price action, no fancy indicators, no signals, no shortcuts, just understanding structure, liquidity, momentum, and how the market really moves. But before we get deep into it, I need you to do these two things. Number one, if you're serious about trading, use the Xness link in the description box below and create your trading account. It supports the channel and helps me bring more real valuable content like this. Number two, make sure that you watch this video to the end. I didn't hold anything back. The explanations, the breakdowns, the mindset, everything is high quality and it is practical. Whether you're a beginner or experienced, you're going to learn something that can genuinely improve you in your trading. So now listen, I normally don't like showing withdrawals, profits, or any of that flashy stuff. I'm not that type of a trader, but in this video I'm showing the real profits and the real withdrawals only. So if you see the truth for yourself, no hype, no rendered cars, no fake screenshots, but just pure results backed by price action. This journey isn't about bragging, it's about proving what's possible with discipline, risk management, and also a strategy you fully understand. So sit back, focus, and let's get into it, because what you're about to see is going to change the way you approach the markets forever. So I also need you to understand that it's not always all the time that I get a 90-cent account and then trade it into thousands. Sometimes I can even blow 10 accounts, 10 90-cent accounts. I can even blow $100 accounts. Sometimes I can blow a lot of accounts trying to raise them. But then as long as you master the simple concepts that I'm going to explain in this video, you'll be able to tip the odds into your own favor. Anyway, without wasting much of your time, let's jump right into it. So we started off with jump 10, as it is the only trade that we can take with this small account. So in the jump 10, you can actually enter just one position, because you might blow. Before this account, I actually blew something like 4 accounts. They were in cents. The other one was actually in $3. But then I managed to raise this one to a significant amount, and then from there I actually managed to raise it to a very big amount. Anyway, let's explain this jump 10 one index, right? So in the jump 10 index, you can see that there was a pattern. The market was in a little bit of a downtrend, right? But then the market created a higher high where there's a blue shadow zone over there, and then the market created a head at the top, right? So now that the market has 2 points that are more like equal. So these points are the resistance points, right, as marked at that point. And also there is another point at the bottom that is the support, right? So this clearly signals that the market failed to break to that top side, to that resistance, creating the second shoulder, right? So at the point, that's where we sell the market. So I wasn't there in the market when the market sold, but then I was lucky enough to catch the trade before it went any further. So this is not really a head and shoulders, because the neckline is not equal. Therefore it is known as the Quasimodo. I'm pretty sure if you know all of my videos, I'm pretty sure I've explained a lot about this Quasimodo pattern. If you didn't understand it, I'm going to do more videos on this Quasimodo pattern. Sometimes you just need one strategy that you can just master, and then you can collect as much profit as possible. So I don't mind re-explaining this or doing another video that is just as quality as any of the videos that I always do. So that is the entry point that you take. And then I wasn't there, as I have said earlier, I wasn't there, but then at least I'm lucky enough to catch the market, because it is not even halfway to our take profit. So this will be our first take profit. So this is a Quasimodo pattern. This is just simple price action. You can just trade this in any of the currencies or even the synthetic indices. As you can see, this is actually a synthetic index that I'm trading, but then it still follows the same principles. Okay, so that's basically how the Quasimodo pattern works. And what you need to understand is that you have to make sure that even if it is in an H4 time frame, like right now, you just have to be patient and then wait for your profit, right? So in terms of take profit, I'm going to put it at the take profit level that I've said earlier. That is our first take profit. But then the market is going to continue in a downtrend, because it was in a downtrend prior to that change of character that created the Quasimodo, right? So after the market finishes this Quasimodo, it is going to continue in a downtrend. So there can actually be more levels of take profit. This one, if you want to see more of it, you can use the Fibonacci retracement, right, or the pitchfork. It can actually show you the next take profit levels after this one, right? So that's everything you need to know about this pattern. And also right now we are somewhere halfway there, but then I'm just going to leave this, so you can actually adjust your stop loss below the entry point. That means even if the market goes back in your against your direction, you can just know that it will hit that stop loss and secure some of the profit that you would have made before it even blows your account. So that is a safer way, that is known as the trailing stop loss, right? So this is actually a very safe way, but then I don't really use the stop loss. That's just because I'm used to not using one. Sometimes the manipulation can actually close my trades when I don't want them to be closed anyway. So I'm just going to pause, and then I'm going to do a review of the previous trade that I took in the previous video. I didn't close, as you can see. There was actually the video ended halfway. I didn't close. I just promised that I would show you the profits in the next video. So here's what I'm going to do.
Okay, so this was the trade. If you didn't watch this video, make sure that you click the link that I'm going to put in the description, and make sure that you watch the video, because it is also very good and you can learn a lot of things that I traded in that video. Anyway, let's see what we got from this video. So the video ended with this trade in $1,000 profit, but then I'm going to show you what happened after the video ended. It only required patience and discipline.
As you can see, I actually managed to hold this account to $6,000 from $100 only. So this required a lot of patience, because I knew that this market was going to hit all the take profit levels, and actually I didn't have time for this trade. I actually traded something else during the week, because I was actually a little bit occupied. So I just knew that the market was supposed to hit all the take profit levels, and I would actually take the profit at the last take profit. As you can see, the take profit that I said in the previous video was actually hit, and now the account was in 192 because the take profit was hit, and now the last take profit is actually reached. This is the point where the market reached the last take profit, and at this point you can safely close the market and then just leave, because where it is going
after this you do not have any other confirmation. Anyway, I went back to my trade. So I'm jump 10 actually surprised me because I didn't know it was going to reach that point. Anyway, as you can see, this was the Quasimodo pattern that we traded, and our take profit was hit, and also the market continued going down. So I actually adjusted my take profit to that level, right? So I'm going to put that level right where I'm putting that TP. That's actually where I put my take profit. I adjusted the take profit and it was hit at that point, and then now our account is $9 just from 97 cents, just one trade, because it was more like a sniper, and I actually took the trade when it was going down, right? I could have blown, I know, but then I just knew that this market was going to continue in a downtrend, right? So as you can see, is that take profit is actually $7.97, so making our account reach $9. Anyway, let's move on to volatility 10 index. So in this volatility 10 index is not that volatile, so we are going to analyze it and see if we can get a trade from it, and if we can't, we just leave it like that. Anyway, so these are the major areas of confluence that I'm putting the yellow lines, right? So these points are very important because they mark the points where the market will face a little bit of difficulty before it proceeds in any direction that it will be intending to go. Anyway, at this point, as you can see, the market was moving, right, going up and down, going up and down, right? So we can safely say this was a downtrend. So what do you need to identify a downtrend, right? The first thing is that the market has to create lower lows, right? And then the second thing is that the market has to create lower highs, right? The market has to create lower highs. And then the third thing, it has to create break of structures. So these are the three things that you need to confirm that the market is still in a downtrend, right? So these three things are confirmed by impulsive move and retracement, right? Impulsive move and retracement. So at this point, we can see that the market was moving in a downtrend direction, creating lower lows and lower highs, right? So let's just change this so that you can see a little bit clearer, because the blue color is not that good. Anyway, right, as you can see, I've marked that line. I'm just going to adjust again so that it can be a little bit better. Yeah, right, like this. Anyway, right, as you can see, I've marked that higher high point, and then there was a support line that was broken down to become the resistance, right? You know, if a support line is broken to the downside, it becomes resistance. It becomes a major area of a supply level where the market can go and bounce there to collect liquidity and go down again. And then at the point the market is created a support, right? And then when the market was going down, the lower highs were moving in a rhythmic format, creating a constant or retracing higher highs, right? So this was an area of resistance. And then there was also another thing that we need to note, the support, right? But then this is not very close because the market only touched that point only twice, so it's not that powerful. But then it was broken to the downside, right? That was a break of structure. I hope you're understanding this. That was a break of structure, right? And then the other thing that we need to take note of is the support that was created, the trailing support from the top, that is all the major areas of confluence, the lower lows that were being formed when the market was going down. It was also forming those lower lows in a rhythmic structure, right? So we can connect those lower lows and see that the market is following a pattern whereby it is failing to break to the downside after it touches that support. So we can say the market is going to buy, right, forming a little bit of a falling wedge. And we know that 9 times out of 10, the market can never break to the downside in a falling wedge. It will always break to the upside. So it always bounces at the support line. Another thing that you need to do is use the Bollinger Bands as your confirmation, right? You know how to set the Bollinger Bands. So as you can see, there was also a Bollinger bounce. The market touched the lower Bollinger, that is the middle Bollinger plus the standard deviation, right? That is how we set this the Bollinger Band. Anyway, so there was a Bollinger bounce, which means that the market is supposed to bounce to the upside, right? So that is what we need to confirm that the market is going to go up, right? But however, the volume of this trade was not favorable, so I decided not to enter because I have a very small account. I still have a $9 account, so I'm not gonna enter this trade because it is less it has less volume. Anyway, let's move on to drift switch. So you are wondering, I'm already in profit in drift switch index. Well, don't worry, I'm going to explain everything that made me buy in this drift switch index 10. Anyway, this is drift switch index 10. It's also another very less volatile pair that you can use in your derivative charts, right? Anyway, as you can see, the market was in a downtrend, and then it created a little bit of a change of character, but it wasn't that powerful, so we are not going to consider it, right? But then the market also formed a resistance at the top and then a support at the bottom, right? So this support is what we are going to use because it is important. The market failed to break at that point, not only once but twice, right? And then there was also another neckline that I've just put the shadows on there, right? So at this point, we can safely say that the market failed to break to the downside, and then with a very big volume, it went up with a very, very big volume as marked by that very big candle. The market, the bulls were very strong going up, were very, very, very strong, right? The market was actually supposed to retest that point where I've put the shadows on it because it is supporting the support from the left side, but then it actually skipped that point, or maybe it just did that with that wick over there, and then the bulls were very, very angry and very powerful. So we will now have to aim for the next take profit. Mind you, this trade can actually retrace and do what it is normally supposed to do, but then if you just enter your trades with proper risk management, even if it does that, you know that you will be safe in the market. It will just eventually go up with you, and then you collect your profit. So that is why risk management is very important. It's because even if you enter a trade and then it doesn't go in your intended direction at once, it will always go to that point. Anyway, our take profit was hit. Now we are in $14, but then the market is going to continue. As you can see, I actually collected a lot. Now we are in 125. So I'm going to close this at around something like 200 because you know it's not always all the time that you get very, very quality trades like this. So this is what I decided to do, and we'll see after our take profit has been hit, right? So I decided to close in $175. This is a lot. Now we're going to visit the gold USD. So apologies, I actually changed my interface. I used another phone, but then it is just the same account I just logged in because that's the phone that I had at that time, right? So gold USD, I actually received this as a signal, and then I analyzed it on my own to see if the market was going in the direction that I was told that it was going. Anyway, so here was my analysis. As you can see, I'm already buying at this point. I'm already buying. So let me explain. This is a 5-minute time frame. let me move on to a higher time frame so that you can see better, right? So as you can see, right, what can you say, what can you use as your analysis? So at this point, I noticed that the market was in a downtrend, right? But then since the market was in a downtrend, it was supposed to get lower lows and lower highs and break off structures, right? But then the market ended a point where it created a U shape, right? You can just Google on the internet how to trade a U shape. It is actually called a cup or a cup and handle. It is not that powerful, but then since I received this trade, this signal from a very good friend who is actually good at this, I just decided, you know what, let me just take it, because it is actually forming something that I already know. So at this point, there was that resistance that I've put the shadow zone. This is a point where if it ever breaks to the upside at that point, we know that the market is now going to continue buying, right? But then if it fails to break at that point, we can say the market is going to consolidate a little bit longer and then it will continue going up, right? So at this point, there was supposed to be a retracement just to retest that point and then go up, as I've shown by those drawings. That is what was supposed to happen, or maybe that is what is supposed to happen, right? We'll just see as we go. But then now I'm already in $400 profit. I'm just going to continue holding so that I can collect as much profit as I can get. So if you are actually very good, you can be able to get more than 50% of your equity in one trade, but that's just for pros. I would recommend that you move slowly as you trade, right? Even if you get just 10% of your profit, your equity, as long as it is safe. The idea is to stay long in the market, not to make much profit. Anyway, I've closed. Now we are in $694 profit. I'm going to re-enter the same gold because I actually wanted to use a bigger account, so this is what I did. So with the same analysis, I continued buying with a bigger account, right? And then now I'm already in $2,000 equity. This is going to continue going up, so we're going to collect as much profit. As you can see right now, this isn't even going any far, right? So you can actually collect as much profit as possible because this is gold USD. This is gold. If you know gold very well, you know that it can give you a very, very big fortune. But I wouldn't recommend that you go into this gold USD chart looking for a fortune, because you might actually be the fortune for the trade. Anyway, that's not the point. I've already adjusted my take profit. As you can see, the balance is now in 1,200 because one of my take profit has already been hit. That means the first take profit has already been hit, but then we are going to adjust for the second take profit. This is going to be very massive. But then now my account is in 7,900. We are now going to use it to trade this volatility 50 1 second. So volatility 50 is 1 second. If you are very familiar with it, you know that it is volatile. That's the first thing that you need to take note of before you even analyze the market, because if it's volatile and you have a small account, you know that you don't stand a chance in the market, because there will be a very intense fight between the bulls and the bears, and you will be the collateral damage if you have a small account. Your small account will be the fuel for those fight. Anyway, the analysis on this one is we need to see the Fibonacci levels. So this is just something that I just do sometimes just to see the current level the market is fluctuating at.
before I make another analysis. It's not that powerful, but then the Fibonacci can actually just tell you the levels that you need to know before you do any further analysis. Right now I'm putting the shadow zone that is marking the high or the resistance point, right, before the market started doing any retracement going into a downtrend. And then that's the support, that's the latest lower low that was created before the market started going up, aiming for a change of character, right? So at this point, what we also need to analyze and consider is the support line at the bottom, right? That is creating all the levels that are important, right? Okay, so that's basically how you do it. Anyway, that support line is where the market is currently at, right? As you can see, the market is currently at two major support levels, but then the other one is not that powerful because it is just one. Anyway, this clearly implies that the market is facing difficulty to break at that point, right? Because right now at two current levels, the market failed to break at that point. And then at the top, there was a resistance that was being followed, right? It wasn't touched a lot of times, so it's not that powerful. But then, fortunately, we are not going to use that in our analysis, right? So what you need to do is we need to also draw another resistance at the point in between, right? So that is actually the one that we are going to use because it was actually broken to the upside at that point, right? The market actually broke that resistance line to the upside, so we can now wait for a retest, or if we have a big account like I do, we can execute. And then even if the market retraces with us, we'll still write it as it goes back up, right? We can actually add more positions if it ever goes down, right? So that's basically how the market moved, right? Creating lower lows, lower highs. But then these levels, these are the lower lows and then lower high. The market creating new lower lows and then lower highs at the top, right? The market at this point, we can say where I'm putting that line, that's where the market creates a support, right? Or we can say that's where the market did a break of structure after that support is broken to the downside, right? And then that's where the market, it happens at a lot of levels that, pretty sure you know how it goes. So at this point, the market did break of structures, right? So as long as there is no a change of character, the market can never be said it is now going in an uptrend, right? Because there is no change of character, right? But then at that point, that's where the market did a change of character because it broke that resistance at the top, right? So if the market did a change of character, we know that it is now going to buy, right? So let's zoom in and see a little bit clearer. At that point, we can say the market is going to buy. So I'm going to use a 1 cent lot size because it's volatility 51 second. It doesn't want you to put a lot of positions. Anyway, as I've executed, as you can see, and you can clearly see that this is very volatile. It doesn't want you to have this rushing things. Anyway, I'm going to add more positions because I have a big account. My account is very big. I can actually sustain all these losses
these floating losses can't actually hit my account. So I'm going to make sure that I utilize that. Trading a big account is very, very powerful, because sometimes even the trades that you are correct, you can lose them because you didn't have enough equity, right? So having a big account guarantees that even if the market opposes you for some time, you'll be able to hold the trade and then ride it as it goes in your intended direction, right? So in terms of stop loss, you just put it back into the trend where the market did stop a breakout, right? And then I'm going to put a buy limit at that point. If the market ever comes to the downside, it will trigger by my buy limit, and then I will ride it as it goes up at that point, right? From that point where I've put that blue line, that's where I will ride the market.
So now we are in $3,000 profit. As you can see, the market is going up. So just by charging with that very small move, you can see that the market collected a lot of profit, right? So how about the market goes up, like what I'm supposing it is going to do, right? So I'm just going to hold it and see if the market goes in that direction even further, right? So now let's check again if you can see that the market is going up very high. This is nice. This is nice. I should have entered more positions than these ones, but then I'm not regretting because I'm already in 17,000. Mind you, this account was in 97 cents account. 97 cents. This is very massive. Even if I blow this account, I'm pretty sure I will be in $2 or something. I would still be in profit because that's it. I would still be in profit. So I'm going to close this because I've already collected a lot. And then in terms of take profit, at that point, or that point, that is going to be our next take profit level. But I'm not going to hold it to that point because I've already been satisfied with this profit that I've collected. So let me know what you think in the comment section below. If you have any question, just kindly put it in the comment section below. Let me know what you think, and also don't forget to subscribe, hit the notification bell so you don't miss on any important update that I will post in any of my videos. Also, don't forget to join my Telegram channel where I'll put simple price action strategies for free, and also sometimes I will post signals that can be helpful for you.